Hey family, how you doing? This is HZ Houston coming to you with another video, and I'm super excited about this one because it's another video for the Money Strategy series, but I would argue it's probably the most important video of all because it's the video that everybody's been waiting on. It's a video on infinite banking. Yes, to go into more detail as far as what it is, how you can use it, because I know there's some of you out there that you save already. You want to be able to retire, but something inside of you is saying that the traditional accounts that you're using, it ain't working. You can't put your finger on it, but you're doing it anyway, and you just don't know of other opportunities or solutions. Well, this is specifically for you because we're going to go into detail about that. But the main thing is, when it comes to infinite banking, let's talk about this. I mean, you guys might have heard terms of infinite banking, max funded insurance contracts, family banking, velocity banking, private banking, all these banking concepts where it comes to leveraging your money. Well, here's what I want to let you know. All those are basically the same thing. Right? They're basically the same thing. So the good news is you don't have to learn all these different things. You just learn one thing, right? Here's the other side of it. If we want to talk about getting wealthy, one of the biggest rules is leverage, right? Leverage. And then we can also add another one in there, OPM, other people's money. So when we talk about infinite banking, we're going to dive into that piece and that concept in just a second. So let's get into it. What is infinite banking? Well, let's talk about what it is not. Infinite banking is not a product. I'm going to say that again. Infinite banking is not a product. It is a concept that could be executed through products. So the reason why I say that is because a lot of times when people hear the word infinite banking, they automatically assume it's a whole life policy or index universal life policy, whatever the case may be. It doesn't matter. The concept is what infinite banking is, and then you use products to execute that concept. Does that make sense? So there are multiple products that you can use to make sure that you can still realize the same benefit. Now that we understand infinite banking is not a product, just because you ask somebody to get you a whole life policy doesn't mean you have an infinite bank. Just because you ask somebody to get you an IUL doesn't mean you have an infinite bank. So here's a rule you want to write down real quick. All infinite banks are insurance products, but not all insurance products are infinite banks. Uh-oh. So that's the first thing that we all want to make sure we address. What is infinite banking? Well, let's define it by what it is not. It is not a product. It is a concept. Yes? Awesome. Now, the second part we want to go ahead and cover is when it comes to infinite banking, what's the actual, what is it anyway? So infinite banking is the ability to leverage your dollar. Okay? Now, what does that mean? That means you can spend the same dollar twice. What? Yes. Infinite banking is where you can leverage your dollar to spend the same dollar twice. Now, let me explain to you what I mean and how that works. So how does that work? Traditionally speaking, if you had 100 grand in a savings account at a bank, you have 100 grand in a savings account. So let's say you earn 1%. Okay. You take out $30,000 from that account. Well, then what do you have left over? $70,000. Okay. That's the traditional way. With infinite banking, you put your 100,000 in an insurance contract now. Now here, the difference is you're going to be earning, let's say, an average of 7%. Now you take out 30 grand. How much do you have left over? If you said 70, you're absolutely incorrect. See, with infinite banking, you have 100, you borrow 30, you still have 100 reflecting your account, earning that 7%. Now, what's the power to you? You essentially created an extra $30,000. So now you're going to take that 30,000 and you're going to put it in real estate or something like that and earn interest again on it while you still have your principal of 100 grand bearing 7% over here. Did I lose anybody? So again, You have 100 grand, you borrow 30, you still have 100 grand. And now you have that extra 30,000 in your hand that you can leverage somewhere else. Here's the deal. In order for this to work, you guys, if you're gonna borrow, see, you're not withdrawing. This is the key. You're borrowing your money. So you're gonna take a loan at a minimal interest rate, and then based off that loan, you're still earning 7%. So the profit that goes to you is the difference between the loan and the average return that you're getting, okay? That difference is called arbitrage. Now, again, if you guys don't remember that or understand how that works, go back to my previous video about the banking mindset, and that could break that down a little bit more. But the main thing is, now, why is it important for you to understand that you need to borrow your money? Because a lot of people say, well, how is this all going to work? Why are insurance companies willing to do that? Now, here's the deal. Here's why it's beautiful that you're able to use insurance contracts to make this work. If you have 100 grand in your account or in the insurance contract, because it's dealing with insurance, essentially it's life insurance, okay? Essentially it's life insurance. So being that you have 100 grand in your life insurance contract is also associated with a death benefit. So what that means is now you have 100 grand in your account and you're telling the insurance company, hey, out of this 100 grand that I have in your account, I want to borrow 30,000 of it. Why would the insurance company be willing to give you 30,000? It's because you have the hard cash in the account right there. So now they're going to give you 30,000, charge you a low interest rate on it. If they're loaning me the money, when will I have to pay that money back? Well, let's use an example. If you had an insurance contract, so now's the bank of you. Listen to my question very carefully. When would the bank of you require you to pay yourself back? Exactly. Whenever you want, because it's your money. So what does that mean? Even though it's a loan, because you are the owner of the bank, you're not required to pay your money back in any specific time frame unless you decide it. If you understood what I just told you, I put you in a position of power where now you are the one, because now you own your bank, you decide when you're going to pay that loan back. Now, let's say you never pay that loan back down the line, okay? You never pay that loan back down the line. Let's just say for round numbers, you have $1 million death benefit. You borrowed 30,000 and you never paid that 30,000 back, just to keep with our original example. Well, guess what the insurance company does? When you pass away and your family receives the benefits, they're going to pay your family the benefit minus the 30,000 that you owed. There you go. There you go. So now everybody's happy. This is the power of infinite banking. This is the power of utilizing life insurance, not for the death benefit, but for the living benefit. Some of y'all catch that on the way home, right? So with that in mind, ladies and gentlemen, infinite banking, just to summarize, is the ability to leverage your money in an insurance contract with an insurance company to where basically you can spend the same dollar twice. I hope that makes sense. If you want to go into more detail on your own, here's a couple of resources that you can look into. Now, obviously, everybody knows about the book, Becoming Your Own Banker by Nelson Nash, right? He's actually the one that spun this whole thing off with the whole concept of infinite banking or banking on yourself, right? Another book that I think is a great option is The Laser Fund by Doug Andrews, right? Another book that I think is a very important option that everybody should look at is called Money, Wealth, and Life Insurance by Jake Thompson. Awesome book. Check that out as well. All right, everybody. So if you learned something about what we talked about here today and you thought this was interesting, do me a favor, comment below. Let's talk about it, right? Let's talk about it. Or better yet, if you like what you heard, do me a favor, smash the like button, share it with somebody else so they can learn. And of course, most importantly, feel free to follow, right? But, in addition, just a little different this time. If you feel like you still have some more questions and you want to go into more detail about how infinite banking might work or how it might apply to your situation, go to our page, click on the link in the bio, and schedule a one-on-one consultation free. With that being said, everybody, thank you very much for your time. I definitely appreciate it. Talk to you guys later.